My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate, teach you, put it in context. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. If you want to know the true state of the economy, stop fretting about the aggregate data, the so-called macro, and start listening to individual companies when they report their quarters. On a day where the Dow backslid 173 points, S&P lost 0.79%, NASDAQ shed 0.68% because Treasury yields continue to sink, and the president tarrified the market. You don't know the term tarrified? You better get used to it. Others were focused on tariffication. Me, I was focused on Home Depot. Why? Because when I'm trying to take the pulse of the consumer during an era where we're all tarrified, Home Depot gives me a much better read than I get from, say, the bond market or from any talking head who comes on TV. Home Depot has all sorts of insights that you simply can't get from staring at the yield curve. And right now, the despot says the consumer, all systems go. After listening to the company's blockbuster earnings call this morning, the idea that we're headed into a recession seems like something from a parallel universe. According to Home Depot, things are strong and getting stronger, not weaker, but there's some issues. Why should you trust Home Depot? Well, I'll give you a simple reason. I'll give you two words. I'll give you Carol Tome, the despot's longtime chief financial officer who's retiring after 24 years at the company. It was her last conference call. Carol Tome is money. Now, we spend a huge amount of time interviewing Federal Reserve officials, going to, Grand Tetons or something, hedge fund managers talking their books, or strategists who keep trying to keep their salespeople busy. But Carol Tome has a better track record than any of them. And she has much less of an agenda, if an agenda at all. In Tome, we trust she should be Fed chief. So what does the great Carol Tome have to say on her last conference call? Let's go right to this morning's conference. Let's go right to this transcript, which helped propel the stock 9 points, even as the clueless headline writers who were trying to be out there so quick called the quarter a big miss 1 nanosecond after the release dropped. Here she goes, and I quote, "While global economic pessimism has increased due to geopolitics, currently the U.S. consumer remains healthy. Consumer confidence is near record high levels, and wages are up over 3% from last year." Hey, you know what? That sounds good. Here's the problem, though. The U.S. consumer is facing the impact of tariffs. While trade discussions are fluid, consumer demand could be impacted. That's bad. There. That is the current dilemma in a nutshell. The consumer's doing well, but the trade war with China is making people lose confidence. Something, by the way, that crushed the stock of Kohl's this very same morning. Way bad overreaction. But Michelle Goss will explain that to us, I'm sure. Still, Tome tells us not to worry too much. Quote, "We are in the longest economic recovery in our nation's history, and yet the amount of growth during this recovery is still under the average of every other recovery in history. So this is one of the reasons why it's been an elongated cycle," end quote. To me, well, you know what that means? It means there's still plenty of room for the Fed to cut interest rates, like the president says. Because throughout the call, Tome kept bringing up deflationary pressures in the economy. If there's deflation like there is in lumber, like there are so many other quantities, the Fed has every reason to keep cutting. Put it all together, it sure seems like the Fed should be able to deal with any potential weakness that comes our way. But the tariffs are a looming factor that I felt after listening to Tome could derail us. Still, Home Depot made it clear that we're winning the trade war. As Edward Decker, the executive vice president of merchandising, tells us, and I quote, "I'm not aware of a single supplier who is not moving some form of manufacturing outside of China. So we have suppliers moving production to Taiwan, to Vietnam, Thailand, to Indonesia, and even back to the United States," end quote. All of these changes will help cushion the blow to Home Depot's same-store sales. They only expect a 1% hit on this. Now, it seems to me that this would be the perfect time to make a deal with the Chinese. They need it more than we do. And I say this as a big supporter of the president's tariffs. That's right. You know I support them. But the last thing any president wants is a trade war-related recession as we head into an election year. If I were President Trump, I would heed Home Depot's call and recognize this hugely important industry is at risk from the tariffs, right at the moment when I'm sure the Chinese government would love a reprieve from the trade war, and because it's causing all this manufacturing exodus. That's why, after listening to this conference call, I think it's time to go back to the negotiating table. I want the president to listen to this call. I want Peter Navarro to listen to this call, Secretary Mnuchin to listen to this call. It's really important. Remember, Carol Tome, she has no agenda. She's not talking about the inverted yield curve, other than in a positive way, because it makes mortgages a lot more affordable. She's not bashing the Fed, even as she acknowledges that our recovery from the Great Recession has been pretty anemic, with several deflation in several key categories like lumber and paint. Tome's making it clear that we're vulnerable to a downturn in confidence in the most robust portion of our economy. More importantly, as she always teaches me, housing punches above its weight in the economy. When you're trying to sell your house or when you buy one, you'll probably hire a contractor to fix it up. We don't want these contractors, huge Home Depot customers, to get cold feet because of tariff worries. These fears dominated the question and answer session, as they did with the calls, by the way. And at the end of the call, I said, darn it. I want this trade war, but I don't want it to destroy both sides. Home Depot called out tools and appliances as especially strong. Decor, storage, indoor garden, building materials, paint, outdoor garden, hardware, and plumbing. They were all robust. Everything on that list, save building materials, could be impacted by the tariffs. Or to put it another way, if I were a sitting president a little more than a year away from an election, I wouldn't want to tip over the Home Depot wheelbarrow. Just screaming at Fed Chief Jay Powell for rate cuts may not be enough, especially when Home Depot execs seem to be implying that the tariffs are what's weighing on people. And the president said this afternoon, hey, listen, we're going to have a rough patch, but we have to do this. Now's the time. I've agreed with that. But I am concerned after this conference call. I'm not worried about Home Depot during a slowdown, though, because the company's so darn clever. Low interest rates, they use them to refinance their balance sheet. Digital, their web business is growing at 20%, but still only represents 8.9% of the total. That's plenty of room for improvement. However, it's more complicated than that. Listen to CEO Craig Menear, who's so smart. While our stores remain the hub of our business, we know that many of our in-store sales are influenced by online visits, and approximately 50% of all online U.S. orders were picked up in our stores during the quarter, end quote. That's telling. If you're a mom-and-pop hardware store, how do you compete with that? Even Lowe's is having trouble adjusting. They're losing professional contractors to Home Depot. Why? In part because the despot's digitizing every aspect of its stores, from price levels to search capabilities and site functionality, all of which gave the sales a real boost. Plus, with the newest fulfillment center, they can now offer one-day delivery to half the country. Now, I know what you're probably thinking. How can we make a judgment about the whole economy just by looking at one company, Home Depot? But it's about a lot more than Home Depot. Walmart reported an amazing quarter last week. They just didn't give us the same level of granularity on the call. Granularity that indicated the quarter got better as it went. Amazon delivered fantastic results, as did Costco. Tomorrow we hear from Target, which puts the T in my WATCH acronym. And while it might not be as strong as the others, it's done amazing things to digitize its business and take share by opening stores with new formats. The bottom line, Home Depot's the perfect microcosm for the U.S. economy, and its outgoing CFO, Carol Tome, is an honest broker. We wish her congratulations and all the luck in the world. She tells us the consumer's in great shape now, but suggests we could be derailed by the trade war. As someone who's always been in favor of cracking down on China, like the president, I think we still need to take her concerns to heart. And I hope the president takes this opportunity to make a deal while the Chinese are feeling the pain from our tariffs, but before we're getting the full impact on our side of the aisle. Let's go to Charlie in New York, please. Charlie.
Oh, yeah, Jim, thank you for having my call. I love watching your show. It gives me so much valuable information.
Thank you, Charlie.
Thank you. My question today is about Foot Locker. You know, last time after earning report, it went down 30%, but the retail consumer spend is up this quarter. Foot Locker, the management, they're doing everything that they could, moving out of the malls. So my question is now with the low stock price, what do you think?
I know, yield's about 4%, but that has not stopped these mall-based stocks from going lower. Look at Macy's, look at Kohl's. I am concerned that yield is no longer protecting any mall denizens. Let's go to Doug in New York, please. Doug.
Hi, how you doing?
Good, Doug. How about you?
Love your show. I love your enthusiasm.
Thank you.
Okay, and I just want to say a shout out to my mother.
Why not? I'll do the same. Well, that's a big megaphone. Go ahead.
Okay, I just want to know about what you think about Beyond Meat.
I have two different views of Beyond Meat. I think the company is really good. I think the stock got away from what the company. The stock is. It's going to take a long time for the company to grow in that market cap. So therefore, I think that you have to be careful, particularly because there's like a half dozen more beef companies that are faux beef coming to market. But I happen to like Beyond, and I think that the management there is excellent. How about Anthony in New Jersey? Anthony.
Hey, how you doing, Jim?
Pretty good, thank you. How about you?
Not bad, not bad.
That's good.
So I was calling today. I wanted to get your opinion on BlackBerry. I invested in them a couple years ago.
I know, but everyone likes the intellectual property component. Everybody thinks that it's worth a great deal of money, but it doesn't have growth. And we like growth in Cramerica, period. End of story. Richard in Montana, please. Richard.
Hi, Jim. A big sky country booyah to you and your staff.
Can't get better than that. My wife loved biking in Montana. Missoula, what's up?
My stock is AbbVie. What do you think of their recent acquisition?
Dorn, I got to tell you, I've been working all day with my buddy Gabe today, and you know what? I think AbbVie's bottomed. I think AbbVie's right. I think the acquisition's good. I'm going to give you two for it. I actually think that Bristol Myers is bottom because it's Celgene. I was going to do a piece about this tomorrow, but now I just gave away the whole darn thing, and I don't feel it. Anyway, I like it. Okay. If you look at what companies say about the strength of the economy, you get a best view of the consumer. If you take a look at Home Depot, you ask, what recession? But you also think, let's be careful. Well, man, buddy, tonight, what Estee Lauder CEO Fabrizio Freda and five-time Super Bowl winner Tom Brady, well, actually more of the coach, have in common. Then, with news that IAC may spin off Match Group and Angie Home Services, I'll tell you if it's worth investing in. And it's a stock that's up about 500% in the past years, and it may not be on your radar, and it may not be too late to buy. I'll tell you the name and see if the move can continue. So stay with Carol Tome and stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.